Central bankers have been incredibly successful in their intention to destroy their currencies in order to formulate a crisis which they can control and maneuver. We know this is their plan simply because of the public decisions which are made and executed. On the outside, it would seem as a complete and utter failure by highly educated, wealthy, multi-generational technocratic elite. The inside, however, reveals the truth. You came here for the truth, so let me unveil that for you. Today we will talk about the global economic collapse. Let's get into this right away as we look at this article out of the Greek newspaper, suggesting that there may be some form of capital controls taken place, and it's not one that many like to look at. Citizens who keep cash outside the banking system are running in droves to the bank branches to ask for details and clarifications on reports that the ECB is planning to withdraw 500 euro notes. So we don't know if this is actually going ahead and occurring at this time. What we do know is that a lot of people have been causing a little bit of panic here in the Eurozone, particularly in Greece. With the country already in the 7-year crisis, many people have opted to hide their money at home in vaults, mattresses, and other places. Banking sources say that many people have chosen 500 euro notes because they're more practical for carrying and hiding. After all, just 20 such notes come to 10,000 euros. And then it talks about how the deposits in Greece declined by 40 billion euros, huge amounts of money, as we see when a crisis happens, how quickly things can occur. So whether or not this is actually happening at this time, we'll have to see. But I do see forms of capital controls with the cashless society and everything else that's taking place occurring not in a linear fashion. It's not all bail-ins of all countries at any given time, all limitations on cash withdrawals at any given time. This happens spotty, it happens all around the world, and it's very difficult to try to keep up with it all. So this is just one thing. We saw Canada getting rid of the penny, for example, as one very, very small portion of this. We see how in certain countries, cash is becoming a thing of the past. So let's keep our eyes on it. That's all I'm trying to say. Debt crisis was never resolved. Sounds like a broken record coming out of this channel. But here we are, the pre-crisis and then the post-crisis. And this is the public sector versus the private sector. Something that I've talked about over and over again, that the transfer of debt bubble from the private sector to the government and the taxpayers. So you can get rid of the problem temporarily. Of course, it's been swept under the rug, and that rug is you and I. The public sector, the governments have put the burden onto themselves. And of course, what does that mean? That means onto you and I. Mass quantities of debt have been accumulated in a very short period of time, never seen before. And it happened so that the corporate debt, that private debt as they call it, can look a lot better. That stocks can continue, that stock markets don't have to collapse and fold. They can simply take that debt and put it off the balance sheet, put it off the books, let the governments take it all. And it's been working incredibly well for them. Of course, not for you and I. This right here, the bubble meter. Just quickly cover this here. Estimated losses 5 trillion. That's the 2000 tech bubble. Estimated losses 15 trillion. The 2008 housing bubble, as the private sector. Estimated losses, trillion, 2015 government bond bubble. That's the public sector. I'll touch on this more in a moment. Let's just look at this for 1 second. Global debt in the trillions. So you're looking at the household, corporate, government, and financial. And you could see there's none of these here that is not a cause for concern. That's the way I see this. See, there's a lot of agencies or individuals, analysts, anything that will point to, for example, household debt. And people are more in debt than ever before. That's important to know. But what about the governments? How are they going to bail out the people that are far too indebted? And same thing, how's the government going to bail out the financial and the corporate and everything else? Well, they can't. That's why we are pushed to the edge right now. These are the facts. When people constantly say to me, and I'm sure to you as well, that there is no need to worry, everything is just fine. This right here should frighten everybody because it's not manageable. It's gone a lot beyond being manageable. This right here is from my book. You've seen it before, but we're looking at the financial system, showing you the upside down pyramid. Now, the pyramid, when it's right side up, is a strong structure. But flip it on its head, you have a very, very big problem. Real assets on the bottom, and this is not the scale, of course, but you have real assets on the bottom, a very tiny little triangle here, and that's not even necessarily real value. I'm talking, let's say, GDP, and above that, supporting, the real assets, trying to support fractional reserve banking. Many multiples more than what we have in our banking system. We have this fractional reserve banking. They can loan out money. And of course, it's been a method of doing so for countless years at this time. Different countries apply these at different times, but essentially what we have is a practice that's just automatic. And above that is the derivatives, which are technically fairly new, and these derivatives are something that dwarf all of those other sections of debt put together. And we have a recipe for disaster. This here is a very interesting article out of the Telegraph. 8 years on from the financial crisis, central banks have done all of the heavy lifting to get the world out of its low growth morass. Look at this. Monetary policymakers have cut interest rates 637 times and purchased 12 trillion of assets since March 2008. Okay. For anybody who doesn't agree that there is a problem right now, imagine this, 637 times since the financial crisis, big bankers had to come together, technocratic elite. They came together and basically said, we are weakening, we have trouble, we have concern, we have to worry, any different word you want to use. 637 times in order to try and make things better. So I have 637 pieces of evidence to show you that things are not looking pretty. There's much more in this article here. I want to get on with this. How many times have you heard me talking about the fact that we will be victims, whether it's through the bail-ins or any other method, where they are going to take our money and use it, whether that's the bail-in or whether that's simply a method of not necessarily confiscation directly, but for example, they take money from your bank account and replace it, or even better, they take your retirement account, whether that's 401k, RRSPs, supers, whatever it is, and they use that and replace it with a government bond. So they can say to you, well, we haven't taken your money. All we did was replace it with a government bond. So they can date it future down the road. Now we have the Sovereign Man website talking about that very thing. I have talked about this countless times, and here we are. Very good article. I'll just cover a couple points. Borrowing retirement funds is becoming a popular tactic. And here there's precedents from all over the world. Hungary, France, Ireland, and Poland are among many governments that have resorted to, quote, borrowing public and private pension funds. Cover that here on the channel, of course. The U.S. government has already done this with federal pension funds. Oops, when they had, in 2011, the Treasury Department resorted to extraordinary measures at least twice. They've been paving the way to borrow your retirement savings for a long time. This is exactly what I've been talking about. And people specifically rely on these retirement accounts. This is why I tell everyone to be prepared. And speaking of being prepared, everyone's favorite, Jim Rogers, had a few things to say recently. We're all going to have to pay a horrible price for the incompetence of these central bankers. We've got a bunch of academics and bureaucrats who don't have a clue what they're doing. This is going to be a disaster in the end. You should be very worried and you should be prepared. This is what I say all the time. Get prepared. This is essential. If you're not working on it, perhaps you don't feel that you could be as prepared. Nobody is ever prepared enough, but do what you can within your own means. That's my message of the day. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you want to look through it, head over to Amazon. They have a look inside feature. It'll allow you to flip through the pages of the book and see if you like it. Take care.